cool. This is good enough. This is enough people for now. All right, I'm going to show y'all how to basically market from scratch, the most efficient way to do so. So that way y'all don't get as confused as much. All right, cool. So all right, so first chart you want to start with is the weekly. Always want to start with this. It's super important, the way you identify the big movements and where they're going. It also allows you to see actual points of contention that matter, like the most important points to attack. If you're early enough to catch them. Oh shit! I didn't mean to do that. Whoops. With Trendlines, you want to connect at least 2 points at the minimum. After you identify the trends and what direction they're going, you then want to find the most important support and resistances that actually matter. This looks pretty important. Somehow that conveniently lines up with that one. This looks pretty important. Hey, can someone mute whatever the heck that is, please, if you don't mind? No, this is the same thing. I'm showing people how to mark charts from scratch. I think it's kind of hilarious because a lot of traders are all about support and resistance, yet they fail to mark and find the most important ones. All right, so we have this so far. This should about suffice. Just one more. Should suffice for now. Now, where it gets confusing is I will see charts. Yeah, basically, this is the most common problem, to be honest, because I'll see people's charts zoomed in, and they'll have shit like this. Like, it's insane. Hold on. Zoom in real quick. Yes, ma'am. Thank you. Alrighty, so I'll see like one right there. Then there'll be like one right here. And then there'll be like one right here. Like, guys, you don't need to be doing that. Not every support and resistance is really that important. The more zoomed in that you play, you do have to keep them in mind. But the more zoomed out you don't play, the less you need to clutter your shit with this. So it's kind of silly when I see someone that has like literally a prison cell for a chart. Like, guys, it doesn't have to be that much. Like, out of all of these right here, the only one that's really important is this one. Because you look left at how many times it did something there. It's important because it did something 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. Then if you like zoom way the hell out on there, it was a pretty important support over here, right? And semi-important as it kept the uptrend going. So, okay, I can dig that. Now, as you zoom in, let me go for the ones that actually are important. Oh, no problem, man. This is my job, and I love doing this. No problem. So, as I was saying, for everyone that kept wondering, especially my students, why I kept saying buy limit 7.50, even when I was drunk as shit. Why did I keep saying that point? Well, because if you look left, it was an important resistance. It was an important support. It was an important support. It was a semi-important resistance. Then if you like zoomed way the hell out, right? You zoomed way out. If you zoomed way out, oh, whoops, sorry, 750. It was pretty important support way on the left at several points. But if you're playing more short term, like if you're playing just a 4 hour, then that was a very, very logical point to put in a buy given the circumstance of what we were at. Like it kept bouncing around that point over and over and over again. Like even this downtrend was defeated here temporarily. It served as resistance there. And what do we know about support and resistance? Really, when it breaks, support likes to become resistance, and resistance likes to become support. So high probability that if you stuck a buy limit right there, considering the movement at the time, well then shit, this was a no-brainer buy at that point. You like literally could do that at that point hours in advance when it was still here and not even have to worry, which is basically what I told my students to do when I was at the club drunk as shit. So keeping that in mind, everyone likes to say, well, what about confirmations, Clay? Hold on, Stephen Hooley's calling me. Hey, what's up, Stephen? Yeah, but what's up? It's going really well. We had my friends and I do a webinar for ourselves, and right now I'm doing an open webinar to whoever is coming, including my students. Yeah, it's going well so far. Let me go ahead and hang up so I don't waste time. All right, buddy. I'll talk to you in a bit. All right, bye. Okay, so anyway, as I was saying, traders are like, well, what about confirmations? Wouldn't you want confirmations to make sure that you would want to buy on that? Well, for me, confirmations are slow. And I mean, there's like several different ways to know for sure without candlestick patterns if it's going to go there or not. So we've got 2 hours before this form hits. What I'm hearing out of Philly is at the time, I did this in my head. So any of y'all know anything about Elliott waves?
This is what I had in mind when they said essential functions only. This is essential because that's
No, I never use stop losses. That's called giving your money away to hedge funds, because hedge funds like to do this wonderful thing called spend money to make money. Yeah, hedge funds like to do this beautiful thing called they will spend millions of dollars to clear the table, to then spend another millions of dollars to start the pattern, and then make money on the way up. It's spending money to make money. You do it all the time. That's why I don't use stop losses. Plus, if you're trading with trend and you're using good risk management, why the fuck do you need a stop loss? Like, it's gonna go in your favor with patience and good risk management. It's just that. Okay, so a lot of you traders get burned because y'all get greedy. Y'all don't use appropriate lot sizes and don't understand like how far things can like go against you or not. And a lot of it has to do with Yeah, I feel you. I was there once, so I believe me, I know. So a lot of that has to do with knowing what support and what resistance is actually important enough and worth your time. Because, I mean, we have these things called Fibonacci numbers. I don't really use them that often. I do sometimes, but whether it's Fibonacci numbers or just eyeballing and looking and using common sense, like wherever you put your order, you can usually tell how far things are going to go down if you just simply look at it. Like, oh, it's TV. Okay, never mind. So, another form of confirmation is if any of y'all know about like Elliott waves or anything.
I was talking behind while they were running off down there. Tom, you gave me a job script.
Excuse me. Whew. Keep putting these in the wrong spot, my bad. Hold on a second. Where's the thing? Hey, whoever has that TV in the background, do you mind muting by any chance? Do you mind muting that? Because it's really, really loud. I should probably... Yeah, if you don't mind, can you finish muting it? Sorry, it's taking me a while. This is really tedious without a mouse. I forgot my mouse at home. It won't happen again. So, if any of y'all know anything about like how Elliott waves work, Elliott waves are wonderful when you're in consolidation because generally how the market moves is in pushes of 3 and in bounces of 5. So, Elliott wave, we were on a hell of an uptrend right here, and then all of a sudden the uptrend died. This is reversal 1. Then what you do is you just kind of wait to see until about where it bottoms, right? Then it bottomed here and it kind of went back up, and then it tested down low but didn't touch the bottom. Okay, this is considered reversal 2, right? Then after that, reversal 2 went way the hell up here, right? And then it died, okay? And it died and died. Okay, well, I guess that's considered reversal 3 because it spiked hard. This was, I think, FOMC, if I'm not mistaken. I think. Yeah, this was. No, this was the action before FOMC, which was great. This is what we wanted. No, wait, shit. When was this? No, okay, yeah, that was FOMC. Then afterwards, so from down there, right, spiked down. Then afterwards, it spiked down there, spiked to 4, it went back up, and then reversed one more time. Okay, well, that's considered 5. Then it went all the way down to about here, then 1, then 2, then 3, then 4, and then reversal 5 happened to be magically on the support that was the resistance and support on the left, and it happened to form a double bottom, right? Like I correctly guessed that it was going to form a double bottom based on what I saw on the left. It happened to be on Elliott Wave 5, which was, I guess you could say technically it was a anyway, it was on support twice, which support twice usually turns into a double bottom. Then afterwards, not only does it do that, but it reversed several times in that. So guess that this was Elliott Wave 5. Well, that's 2 confirmations right there. And this was before a candle pattern ever gave birth. So once you see enough of these things happen, you can already kind of figure out what it's going to do. And that's kind of what, as traders, you ultimately want to be able to do, because you never want to be late. You never want to be late to the party. You want to be the person that is early and runs a chance of being wrong, because you will know when to cut your loss if you're wrong. Or if you're swing trading, you still win if you use good risk management. But point is, you never want to be late to the party. Market maker trading is nothing more than saying, yo, don't be late. Don't sell late, don't buy late. It's as simple as that. Like, that's what it really boils down to in the grand scale of things. So we attacked here, and it's here. No fucking way I'm going to buy unless I see something that I like go like maybe here or something like that. There's no way I would buy again if I was just hopping into a trade. Now, if I'm holding buys from right here, maybe I might. Probably still wouldn't, because this is kind of finicky and we won't know more until after the gap is settled. But there's no way in hell I would buy if I was just jumping in a trade. If it gaps down, which I'm not really sure that it will, it might at this point. If it gaps down, it probably gaps to about like right here. So, because I mean, we've got this important point on the left, this important point on the left. This was pretty important because it delayed the uptrend, and et cetera. The list goes on and on and on. So looking left, okay, well, if I was big money and I wanted to make everyone's day mad as shit, I would want to test the most important point on the left. That's usually how this game works. It's all about testing the important points. So this is then when you would look left and go, okay, well, that's important. Then you put a support right there. Does that make sense? Like, yeah, you could make money off of these and everything. You could, but this is, you would play this on the minute chart and get away with some money or whatever. This ain't really fooling with your time, because like the bigger moves are up still. Does that make sense? All these traders, they get so caught up in like trying to attack every single one of these motherfuckers right here. They just got it. It's like crack. They got to mark all of these, right? Like some sick obsession. And then they'll do stupid shit like sell right there. Like this ain't worth your time. Like, yeah, I guess it's a resistance, but it obviously ain't important enough, and that's where a lot of people mess up. So the bug picture. Well, I mean, you can technically buy at any time frame, but like technically the buy right here was made on the 1 minute. I watched it on the 1 minute up here, looked at the 1 minute from here, and just kind of drunkenly saw this on the 1 minute form there again and just bought again. I actually had a buy limit. I chickened out of it, and then I bought again because like it touched the same point, so fuck it. That's how you have to play this stuff. I mean, most of the bigger traders are trading this off the 4 hour. And at the time of the 4 hour, you had two sets of opinions. I witnessed this live because, trust me, I watch people lose money on this. You had two sets of opinions. You have people who are obsessed with shapes for some retarded reason. They're like, it's got to form an M. These shit does not have to form M's and W's. They really don't. Why y'all are brainwashed into thinking that is honestly beyond me. Oh, I think you joined late. Okay. It's really as simple, Ryan, as I looked left. Like, this was an important point right here. Like super, super important. You had 1, 2, 3, 4, 5, 6, 7 touches, like shit. That was super, super important. Then over here, it was super important again. It served as resistance and support. This is a highly contested zone, right? So we have several clues that A, we're in an uptrend, B, there was no news, C, we're near contested support / resistance. And usually when you're in an uptrend, your resistances become support. So I clearly saw that buyers did not give a shit about this. Like the first time, they didn't give a shit about this being resistance. They didn't care. They were just like, well, fuck it. Cool. We're just going to go past it. Then over here, the sellers couldn't get the job done. No matter how hard they tried, they couldn't get the job done. It was rejected, right? So then they bought again, and then the sellers attacked one more time based on news, like news. And yeah, they touched it with the tip or whatever, but they still couldn't get the job done because big money is going to get what they want eventually. And big money wants this to be on an uptrend, which is why I always advise you guys never trade against the trend. If you trade against the trend, unless you know what you're doing, you're going to lose. And the clear trend, again, if you zoom out, is up. Like, this is clearly on an uptrend. Like, clearly on an uptrend. I mean, like, damn, this is all arrows point to up. Come on. Like, I mean, damn, this is clearly going up. I mean, yeah, it'll fluctuate up and down, but it's clearly on an uptrend from this point on. And this is substantial, as this has been like this for, oh shit, like since January, about the time gold went up. And then not only that, but you have this bad boy forming. You have a breakout triangle forming. And well, I kind of drew it sloppily, but you get the point. Like, this is no different from what happened over here on the left. Like, oh, why'd you do that? I liked your drawing. It was nice. No different. Like, breakout triangle up. This is literally forming a larger breakout triangle up. Even if the breakout triangle fails, at the bare minimum, you can make profit here. Now, of course, as we all know, nothing ever goes in a goddamn straight line as much as we wish it did, right? We wish it did, but that's just not the case. So, I mean, the smart people who don't like to work hard, all they're doing is just every single time there's a dip, they buy, and then they take profit as they feel like, or they just wait for the resistance to hit. And this is a pretty consistent resistance. Like, you've got that one or you've got this one. So those of you who saw my drawing the other day should probably start understanding how on earth I came up with those target points. Is simply because support and resistance and also the trend line from the weekly. I mean, I didn't draw that straight, but you get the point. Obviously an important resistance, because when this resistance hit, this said fuck you and pushed the price down really, really hard. Okay, well, that's important. So this is probably a good guess as to a good take profit point if you don't think this will actually break out up. It'll touch it eventually. Trust me. Big money looks at this and goes, huh, this looks important. Let's try this one. That's how they play this game. So we have several different factors of that right now, right? Then if you're looking at it from like the market maker method perspective, if you're looking at it from market maker perspective, I mean, you had several levels of drop. You had chop, right? Then you technically have depends on what time frame you're looking at. This can either be considered level 1, or this could be considered like level 1 and 2. It really depends on how you look at it, honestly. I consider this level 1. I consider this level 2. And we are conveniently in the middle of level 3. There will probably be some drawback as usual, but the shit should rise. That's if you're using market maker method. Or if you're just looking at what it does, it's obviously got to go down at some point and then it's got to come back up, because the money for all of these moves has to come from somewhere. Like, it can't, unless it's just a major event, unless a major event happens and everyone just YOLO buys or YOLO sells for whatever reason, the money for these moves in times of market when there ain't shit going on has to come from losers. And what better way to get losers than to make people panic out of late buys and panic on late sells? That's where the money for this stuff comes from. It's like rocket fuel. So, like I said, different methods, different strategies, all pointing towards the same thing. Now, just because I say this is going up, that does not mean that it's either going to go straight up or it's going to go down and then straight up. This could take a day. This could take several days. We don't know for sure just yet. We have important events coming up. We have the RBA interest rate decision, which Australia will probably cut their rate, because even though their currency is on an uptrend, Australian economics kind of sucks at the moment. They're kind of stagnant, but what's saving their currency is that they're backed by commodities. And people feel more comfortable with commodities like precious metals and stuff more than they do with paper money and faith money, which is what the dollar is. The dollar is only strong because Brexit made it that way. And also our military, even though they're trying to neuter us, still kicks ass. Like, that's it. That's all we really have is thank God for Brexit. Thank God that our boots on the ground get the job done for the most part. So now, as with all the pairs, retraces are always inbound. So if you want to compare, let's look at the DXY. The DXY is the dollar index. The indexes are super important because they can give you a heads up as to what's coming next. For instance, every single day this week or last week, I kept saying, guys, like, the yen is strong. The week before, the same thing. Guys, the yen is strong. Well, how do you know that the yen is strong, or how do you know that the dollar is strong, and so on and so forth? I'm going to move this down. These indexes, woo, damn, that dropped like a motherfucker. Yeah. I actually haven't been paying attention to it that much, but it dropped more than I thought it would. Anywho, so you can do technical analysis on the index just like you would any other pair. You can do this on whether it's the FTSE, the Nikkei, the any stock index like the S&P 500. You can do it on basket indexes like the DXY, which is what the DXY is. It's a currency basket measurement of dollar strength versus other pairs, right? Now, we had been watching this carefully, and didn't go as high as it did, but it did reverse as expected. I didn't think it was going to go that far, but you get the point. So now that this drop has happened, now you understand why, gosh darn it, now you understand why pairs like UCAD and USD JPY and other USD pairs drop. There were several other factors, but if you do technical analysis on this, it can usually give you about a decent 10 to 30 minute head start on what's coming next on big movements for USD pairs. If this shit drops, things are going to go up that are anti-dollar, and if it goes up, anti-dollar pairs will drop. A retrace for this is inbound. The way I see it, this is a retracement from a flag, right? So it'll kind of just mosey on over to about maybe here or so. Again, looking left, we see many, many important points. Whoops, sorry. See many important points. So that's why I keep saying most of these pairs will probably complete their pattern. And the minute that shit hits about there or so, back to the uptrend, to the trend line. We'll test the trend line. Ooh, I need to charge my laptop too. Test the trend line. So keeping that in mind, okay, I'm expecting US dollar pairs to reverse and go up this week. That won't be forever. That won't be forever because the world seems content in keeping the dollar down in strength because the dollar is kind of full of shit if you really think about it at the moment. This might change maybe a couple of years from now, but at the moment the dollar is lying and full of shit. So that being said, probably comes back down and then goes back down. Now, how this is important to you as a trader is using this to help figure out what the DXY will do will help you give an idea of like what US dollar pairs will do and what anti-dollar pairs will do. It's for this reason why I kept saying y'all need to buy AUD USD and NZD USD. I said that all last week, and look what the fuck happened. And it shot the fuck up almost all week. Even Wednesday, even when it dropped down, it went up because faith in the dollar and technicals on the dollar say, nah, you're just playing. Dollar just playing around. Don't believe that crap. And, well, there you go. So you have several clues as I would suggest you mark on TradingView and execute trades on your phone. I've kind of gotten to the point where I hardly ever need to mark up charts personally because I just memorize zones and price action. But starting out, I would say that you need to mark up on TradingView because it makes it a hell of a lot easier to see. And plus, MT4 on computer kind of gets weird sometimes. I personally like TradingView. I've tried both, and TradingView won out by a large margin. Better tools and shit. I better charge my laptop. And easier to see. If this somehow dies, well, the webinar ends in 6 minutes. If this somehow dies, I'll be right back and everything. So I'm not really going anywhere. I'm still doing more of these. If it does die, or if this ends up hanging up before that needs to happen, think of questions to ask and ask away because this is my job. So. All right, we're good. Sorry about that. I had to get to the plug. Where were we? See, we have 5 minutes. Cool. And it looks like we have questions. Like I was stating, it'll probably go up to complete the pattern that we saw. Hold on, let me get back to that. It'll probably go up to complete the pattern and then retrace down, which will provide an excellent opportunity to rebuy. Let's go to that. Let's go back to that real quick. To be honest, if I were y'all, I would not play AUD USD until after RBA. Does that make sense? Because RBA is going to be a really important decision. And more than likely, RBA cuts the rates. RBA is going to cut their rates on their interest decision or whatever. So from what I see happening, if you guys are not in buys already, I'd suggest you just sit out of AUD until RBA, because whenever they make their interest rate decision, more than likely what's going to happen is shit. Where is it? Go ahead, clear this chart real quick. More than likely what's going to happen is they do this. This does some type of shit right here where it just like, whoa, oh my God, and then it drops. And then depending on what RBA does, RBA will probably drop it to about shit, like maybe right here or something. I don't know, because it really depends on where the pair ends. The safest thing to do and the smart thing to do is wait until Wednesday. Then if they cut the rates, you will see a spike down. When the spike hits a support, either here, here, or here, it really depends on where the price ends up being at the time. It's possible that it even ends up here, which I doubt, but it is possible. Wherever that spike ends, right? Wherever it decides to end, you attack it with a buy at the tail end of the spike. Just like FOMC, same thing. When that shit spiked down, we bought the fuck out of it, because this is going on an uptrend no matter what, because big money is going to get what they want. So if it spikes here, if the spike stops here, 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 you buy. It's as simple as that. You kind of want to see where it ends up being first, but when the decision comes, no matter where, honestly, it doesn't matter where the spike stops, like, or where the spike goes. It's wherever it stops. The minute that shit stops, watch the minute chart and zoom out on it. The minute it stops, you buy. Simple. You set in a buy and you just let that puppy ride. I make trades off of any time frame, like any time frame. It doesn't matter. Sometimes if I'm bored, I'll play the minute chart and just go up and down all day. If this week or last week I was with family, so I actually traded the daily, and I just used some precision setup trades for the week, or I even just lazily swung trade and compounded as it went my direction. I use every time frame. I trade every time frame. Most of the trades I place when I'm actually like giving a shit and really trying are on the 1 minute. Now, I will either play 1 minute scalps, or I will use the 1 minute to see exact points of support and resistance and press whatever button is important at the time. You can trade on any time frame. I suggest you look at all time frames before you make a decision. You will learn how to do this the more you practice quick, because all the time frames hold clues. Looking at all time frames, mostly the higher time frames show buy. The lower time frames show we're not really sure what's going to happen yet. Like, lower time frames show, okay, well, this sold, so it'll probably support and resistance and probably go up or something. Because 1, 2, 3, let's see. 1, 2, 3, 4. Okay, shit. Scratch that. 5 reversals on the small one. Okay, this will probably go down to about support, which is kind of what we're expecting for the gap. Probably does something like that. If it goes up, I definitely would not buy this. If this like gaps up, you better not buy it, because like don't buy